Good morning and welcome. You are watching Market Cafe on ET Now. I'm Nupur and joining me on the show is Meryl. And over the next half hour, we'll take you through all the global cues and then head on to what's happening in the India markets. Let's begin with a look at what's taking place in the US. Well, the US stock futures have edged higher in fact, the S&P 500 has climbed for the third straight week through, though it ended Friday a bit lower. Looking at the Dow Jones futures right now, they've risen about 11 points. The S&P 500 futures and the Nasdaq 100 futures have also climbed. Wall Street, of course, is coming off 3 consecutive weeks of gains for the S&P 500, which again has notched up fresh all-time highs last week following a blockbuster earnings season. Now, for the week, the S&P 500 has advanced about 0.4%. The Nasdaq has also eked out its third weekly gain in a row, ending the week higher by 0.1%. The Dow closed 0.6% lower, however, week to date. Now, the stock market has continued to climb in the face of ongoing hostilities in the Middle East, as well as concerns around artificial intelligence trade. Just giving you a sense of what we're expecting in terms of later this week. The investors, of course, will be looking at a weaker consumer picture, with retail sales for July having shown an unexpected decline on the month. Now, on top of that, of course, consumer confidence in the economy has fallen in August, reversing course from improvements that were seen in June. So let's see how the Asian markets as well as crude is tracking, and Meryl's with us for that one.
That's right. So as we're seeing that oil prices have barely moved in early trade. This is as tanker traffic through the Strait of Hormuz has slowed over the weekend, with no peace deal in sight between the US and Iran to end the conflict in the Middle East. If we take a look at the numbers, then Brent futures have seemed to be climbed about 0.2% or 20 cents, reaching up to $88.72, while the US WTI crude futures has slipped 5 tenths to $82.35 a barrel. Both these contracts have, in the past week, gained more than 5%, following the attacks on tankers operated by Abu Dhabi National Oil Company and in the Strait of Hormuz on a Saudi Aramco refinery. If we take a look at the Asian markets, that as well is trading quite mixed. We've seen Japan's Nikkei fall about 0.2% as Japan's economy grew slower than expected in the April to June quarter. The company's GDP grew at an annualized rate of 1.1%, where the expected was going to be at 2%. Hong Kong's Hang Seng Index futures also indicated a higher opening. South Korean markets are closed given the observation they're substituting the holiday for Liberation Day. So all of these trends on the Gift Nifty as well, the trends are below. The Gift Nifty is currently trading at below that 24,400 mark, about 55 odd points lower, signaling quite a weak start for the frontline indices, both Nifty 50 and Sensex today.
All right, let's now turn our focus to the news that could impact the markets more. Now, starting off with the latest on the West Asia, US President Donald Trump is escalating his rhetoric over the Strait of Hormuz, saying he wants the strategic waterway to become US territory pretty soon. Trump says that the United States effectively controls the strait through its naval blockade, as Washington continues to pressure Iran amid stalled negotiations. Now, Tehran, however, is rejecting the US claim and insisting on its own control over the crucial shipping route. Now, the standoff is also disrupting tanker traffic, with vessel movements through Hormuz falling sharply over the weekend.
That's right. And in a fresh push to revive the Gaza peace process, US President Donald Trump's envoy, Jared Kushner, has held a rare meeting with Hamas leaders in Egypt. The talks are focused on advancing Trump's roadmap, which calls for Hamas to disarm, an Israeli withdrawal from Gaza, a permanent ceasefire and reconstruction. Hamas has reaffirmed its commitment to the second phase of the plan, but is seeking an end to Israeli strikes and a withdrawal from Gaza. Kushner is now expected to meet Israeli Prime Minister Benjamin Netanyahu, who has opposed the roadmap without Hamas first fully disarming.
And moving on to the latest on the Russia and Ukraine, the long-range air war is escalating, with Russia launching another wave of drone and missile strikes across Ukraine, including Kyiv, while Ukraine has responded with one of its largest drone offensives against targets inside of Russia. Now, Russian strikes have killed civilians and damaged infrastructure, with a major book market in Kyiv also being destroyed. At the same time, Ukraine's attacks have targeted Russian logistics and industrial infrastructure, including a major wild berries warehouse near Moscow. The widening aerial campaign is putting further pressure on both sides' air defense capabilities.
Moving on to other global markets, especially Nvidia could be taking another major step into the AI infrastructure boom. The chip giant is reportedly in talks to invest up to $3 billion in SB Energy, which is a SoftBank subsidiary. They're developing a massive data center project in Ohio for OpenAI. And the proposed investment of up to $3 billion, this would be supporting the build-out of the facility, with Nvidia potentially putting up half the amount upfront and the rest linked to SB Energy's planned IPO. The reported talks are part of a much larger financing effort around OpenAI's data center expansion, and this is underscoring how Nvidia is increasingly moving beyond selling chips to backing the infrastructure needed to power the next leg of the AI run-up.
Well, Anthropic has reported a sharper jump in revenue, with its second quarter revenue reaching more than $11.5 billion, according to reports. The Claude maker's revenue run rate has also surged to around $47 billion in May, highlighting the extraordinary pace of growth in the AI business. Now, the numbers come as the AI company prepares for a potential IPO, with investors increasingly looking at its growth trajectory and the huge spending that's required to build out AI computing capacity.
Let's switch focus on to the monsoon updates across India. Mumbai's 7 reservoirs now hold up to 92.24% of the total water stock, and this is even as India's cumulative monsoon deficit stands at 13%. Heavy to very heavy rainfall is expected across several parts of the country over the next few days, including eastern and northeastern India. We've got on board with us Akanksha to give us more of these details. Akanksha?
That's right. Monsoon activity continues to remain strong across several parts of the country, with heavy rainfall expected in many regions. A low-pressure area over southeast Jharkhand and nearby areas is likely to bring isolated heavy to very heavy rainfall over West Bengal, North Odisha and Jharkhand during the next 4 days. In fact, isolated extremely heavy rainfall is also expected in these areas on 17th August. Meanwhile, the Western Himalaya region and Uttar Pradesh are also likely to see isolated heavy to very heavy rainfall on most days of the week. Heavy rainfalls are also expected over Jammu and Kashmir, Punjab, Haryana, Delhi, Uttar Pradesh, Rajasthan, Assam, Meghalaya, Arunachal Pradesh and Madhya Pradesh. Now coming to Mumbai, the city's 7 reservoirs continue to remain in comfortable levels. As of 16th August, Mumbai's 7 reservoirs have reached 92.24% of their total live storage capacity. Now looking at the latest monsoon deficit numbers, so East and Northeast India continues to report the highest rainfall deficit at 27%. Northwest India has a 12% deficit and Central India is 1% below normal. The South Peninsula, on the other hand, continues to remain in deficit at 21%. So overall, India's cumulative monsoon rainfall deficit number now stands at 13% as of 16th August.
We slip into a very short break here on Market Cafe, but when we come back, we're going to be bringing you what's happening and expected to happen rather in the Indian markets later today. Do stay with us. Thank you very much for staying with us on Market Cafe, and let's turn our attention to what's happening back home. Well, in Maharashtra, there's a lot of news that's coming in. The Maharashtra FDA, which has been quite active, has now issued a show cause notice to Bollywood actors Shah Rukh Khan, Ajay Devgan and Tiger Shroff over their endorsement of Vimal Ilaichi. Now, the regulator suspects the advertisement could amount to surrogate promotion of Pan Masala and has given the actor 15 days to explain their due diligence. Further legal action could follow. Akanksha is now joining us with more details on this. So good morning, Akanksha. Tell us, how much of trouble are these actors in?
That's right. Maharashtra FD has issued a show cause notices to 3 actors. This include Ajay Devgan, Shah Rukh Khan, and Tiger Shroff over their participation in a Vimal Elaichi advertisement. According to the FDA, Vimal is strongly associated with pan masala in Maharashtra. And do remember that pan masala products are containing prohibited substances are currently banned in the state. So the regulator's concern is that using the same Vimal brand identity for Elaichi could indirectly reinforce the association with the prohibited pan masala product. Now, because of this, the 3 actors have been asked to explain what kind of due diligence they carried out before agreeing to this endorsement. In fact, the FDA has also asked them to provide details related to their endorsement contracts, campaign briefs, product information, and other documents connected to this advertisement. It's important to note here that this is only a show cause notice at this stage, and no penalty has been imposed through this notice against any of these actors for now. The FDA has also, in fact, asked them to stop participating in the advertisement and also to remove the promotional content from their social media websites and other platforms under their control. Now, the actors have been given 15 days from the date of receiving the notice to submit their explanation along with supporting documents. They can, in fact, also request a personal hearing for the same. And finally, if they do not respond within the stipulated time, or if their explanation is not found satisfactory enough, the FDA says that further action may be initiated against these actors.
Got that. Thank you, Akanksha, for taking us through that. But switching focus onto an ET Now exclusive, the 2-day PSB Manthan begins today with the finance minister set to address top public sector bank leadership. This meeting will review the PSB performance and reforms, with deposit mobilization, investment, global expansion, and the government's top 20 global bank ambition in focus here. We've got Prakash on board with more details on this.
Well, PSB's Manthan begins today with key issues on the agenda. In fact, the 2-day deliberations will be attended by heads of public sector banks, senior finance ministry officials, RBI officials, and some key economists. In fact, the finance minister will also attend the meeting. In fact, address the gathering as well. The government will review PSB's performance based on defined parameters. Sources suggest that the finance ministry may deliberate on the next phase of PSB reforms during the meeting. Deposit mobilization and banking for youth among the top key agenda items. In addition to that, PSB's role in accelerating the investment cycle and developing global capability centers will be part of the discussion as well. Efforts by PSBs to place 2 Indian banks amongst the world's top 20 global banks likely to be reviewed as well. You are aware of the fact that the government has set a target of placing 2 PSBs among the world's top 20 global banks as part of the Viksit Bharat Vision 2047. And therefore, the government will review the progress made so far. It is important to note that the Prime Minister has also set a global ambition for PSBs in his Independence Day address from the Red Fort. Therefore, this issue is going to be on the agenda. Of course, prominent focus will be provided. In addition to that, sources also suggest that the government may cover agriculture credit, status of agriculture credit, the horticulture value chain, and of course, overall credit growth as well.
All right, Prakash, thank you very much for taking us through all of that. Now let's turn our focus to stocks that will remain in news today, and Rabinder is joining us on that one. Morning, Rabinder. I think you've picked out RIL and Ola Electric as the top 2 today. So take us through why they're going to be making news.
Well, as Reliance Industries can be in focus in today's session, as company Reliance Industries and Rolls-Royce to partner and develop India's indigenous combat engine for advanced medium combat aircraft program. So back of this news flow, these stocks can be in focus. From the auto space, Ola Electric can be in focus. Ola Electric has entered the energy storage market with 3 BESS products targeting residential, commercial, industrial, and utility scale application in India. From the real estate space, keep an eye on Sri Lotus Developers, where company has secured a residential redevelopment order in Dadar with an estimated GDV of Rs 550 crore. Banking from the banking space, Yes Bank can be in focus where the telecom department has invoked 281 crore worth of bank guarantee issued by Yes Bank in 2018 for a borrower spectrum payments. UPL can be in focus where companies step down subsidiary Advanta to acquire approximately 100% stake of the Egypt High-Tech for approximately $110 million to strengthen its position in fast-growing MENA and African concrete market. From the pharma space, Dr. Reddy can be in focus where US FDA investigation from August 6 to 14, 2026 at Hyderabad plant concluded with four Form 483 observation. CMAC has entered into a consortium agreement for diving technical support on two ONGC vessels, Samudra Sevak and Samudra Prabha, with contract worth approximately 131 crore and 124 crore respectively. Another stock that can be in focus on the back of the order win is NAB Limited, where the company has received a 560 crore worth of order from the Indian Army. And lastly, Neuland Lab can be in focus where US FDA a company has received Form 483 with US FDA with one form. So back of this major development, Neuland Lab too can be in focus.
Okay, thank you, Rabinder, for taking us through that list. In fact, we've got a whole host of other counters in focus as well on the back of their first quarter performance results. Snehi is on with us to take us through that list as well. Snehi, take it away.
To watch out for on the earnings front. We're at the fag ends of the earnings season, so this is just a roundup of the last list of stocks that will be in focus on the back of earnings. First, let's take a look at Uflex. Very strong set of numbers, a beat versus our estimates. Revenue was up 37%. The EBITDA has seen a very good jump, almost doubled, so a 94% jump on that front. The net profit at 422 crore compared to 62 crores this time last year is an uptick of almost 7 times on a year-on-year basis, and margins have also expanded quite nicely at 16.6% compared to 11.7%. On the flip side, watch out for Max Estate. Weak set of numbers. While the revenue was absolutely flat, the EBITDA has seen a knock of close to 42%. Profit is down 30%, and we've seen very significant margin contraction here at 15.6% compared to 27% this time last year. Continuing with weak earnings, watch out for Sattvic Green Energy as well. The stock could react negatively because the revenue has taken a hit of 44%. EBITDA is down 80%. Profit this time has just come in at 5.5 crore rupees compared to 117 crores, and margins are also extremely under pressure. Schneider Electric also weak set of numbers. Before that, Rubicon Research has reported a good set of numbers this time around. Revenue is up 52%. Margins have also expanded quite nicely. But speaking of Schneider Electric, weak set of numbers coming in. You've got the PAT that's taken a knock of 71%, and EBITDA margins have almost halved. Talking about mixed set, Physics Wala is a mixed set of numbers. The net loss has reduced on a year-on-year basis to 78 crore compared to a net loss of 120 crore this time last year. Cochin Shipyard and PTC Industries, both very strong set of numbers. In fact, the top line for Cochin Shipyard has gone up by about 2.4%. EBITDA and profit have slightly fallen. But for PTC Industries, revenue has almost doubled. It's a 97% jump over there. So watch out for all of these stocks on the back of their Q1 earnings.
All right, Snehi, in fact, do stay with us. We understand that it was a mixed quarter for Voltas with revenue and EBITDA missing street expectations. Management also foresees Projects Biz to see sequential improvement in Q3 and Q4. So tell us a bit more about that one before we let you go.
Voltas will also be in focus on the back of its Q1 earnings, and it's a mixed set of numbers coming in because the revenue and EBITDA have come in slightly softer than our estimates as well as the consensus street estimates. However, the net profit is a beat this time around, and margins are absolutely in line. Taking you through what those numbers look like, revenue at 4,674 crore rupees is an uptick of almost 19% on a year-on-year basis. The EBITDA is up almost 49%. PAT is up 52%, and that's a beat on our estimates. We were estimating 207 crores. It's come in at 214 crores. EBITDA margins have seen a little bit of an expansion at 5.7% compared to 4.5%, an uptick of 115 bips, but this was largely penciled in by the street, so in line with our estimates. Taking you quickly through what the Q1 highlights for the company has been, they've entered into a joint venture with Atomberg Innovation to build RAC compressors in India, and this can relieve a lot of pressure from their supply chain when it comes to compressors. They've achieved a 17.3% secondary market share in RAC in the first quarter. RAC volumes were up 45%. Commercial ACs, they say, represents a long-term growth opportunity, while commercial air coolers and refrigeration this quarter has slightly been soft for that. Voltas has done well. EMPS new order book remains delayed due to geopolitical tensions is something that they've said, and the EMPS carry forward order book stands at 6,345 crores. To sum it up, the management outlook, they've said that Q2 is traditionally a leaner period, but Voltas remains well equipped to navigate the challenges, and unitary cooling products have grown 32%, but the EMP segment has seen a cut of 27%. Lastly, taking you through some of the con-call takeaways, they expect capex for Attenberg's JV to occur between FY28 and FY29, and overall cost increase, they say, was 10 to 12%, partially offset by price hikes. Jefferies, Motilal Oswal, ICICI Securities have all maintained their rating but hiked the target price. Investec and Goldman Sachs continue to to maintain their rating as well as the target price on the stock. So that's a roundup on Voltas' Q1, largely a mixed bag.
All right, thank you, Snehi, for taking us through that. Voltas also going to be in focus today. But with that, it's a wrap on this edition of Market Cafe. Stay tuned, don't go anywhere. We've got the markets lined up next for you.